Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on our podcast, I have Lorne Andrews. Lorne's success is founded on taking the time to understand each client's unique circumstances and then securing the most appropriate financial solution. This holistic approach ensures that you secure the best rate, and frequently he's able to save clients thousands of dollars, which can be leveraged to create other wealth building opportunities. Welcome to the podcast, Lorne.
Thank you so much. Excited to be here. This is great.
Yeah, no, I'm. You know what? I was going through your history, and you have such a rich history. And I don't know if we can go through all of this, but I would love to kind of understand how you got into the mortgage industry. What kind of pulled you in? Was this something? And you're very involved in a lot of ways. Was this something that you kind of knew that you're getting into? I doubt you kind of fell into this, but can you give us kind of a run through as to how you got into the industry?
Yeah, I think that whenever you're pursuing a career, it's never a straight path, right? So you're just
Yeah.
you're trying to figure out, different ways, and I think that at the end of the common thing for me was always being able to try and do something that would contribute and help people in some way. And I started off, you know, teaching. I was teaching for Ontario Real Estate Association. I was helping, realtors, even though I was more on the mortgage side. Um, but I saw a lot of realtors coming into the industry that just needed guidance. They needed help. They were, when you go through college
Yeah.
or doing that, it's like teaching you how to play golf without ever swinging a golf club, right?
Yeah.
So, it's this lost sheep coming out. So you're just trying to, then you're trying to think of, why you're doing it. And what you're trying to do is help people reach their potential and impact people, impact families. And, leading into the lending side, there's nothing more impactful when you get the keys to your first home, right?
Yeah.
And the joyous thing I have is when people send me
Yeah.
pictures of them with the keys to the first home, and that's their first home, and then it becomes their second, the next home, and everything else. So, part of when you get into financing, a mortgage is like your biggest debt you'll ever have in your life, and that's why leaning into mortgage broker or having a relationship, whatever, because our responsibility is kind of to manage that debt through the life of that mortgage
Yeah.
and figure out where everybody wants to get to. So that's the actual under, like, doing the mortgages is not the exciting part. It's the relationships and allowing people to realize the dream of home ownership. That's the exciting
Yeah.
part, right? That's
Yeah.
the
Yeah.
part that gets me. Um, and that's kind of what's driven me, and I have a team of about 50 agents that work for me, and it's about helping them reach their potential too. And that's what gets me up in the morning, so it's just, I'm excited every day when I go to work.
Yeah, I mean, I find that, you know what, like real estate is something that definitely the first home, it's like it really sets up the quality of your life. You can kind of bring into reality what you dream of. It has your family involved, and then how you finance it really affects in a lot of ways. When your kids go to college, do you need a loan? And going through all of that and buying all these other things to make sure that you're also creating wealth, but at the same time, your standard of living and all that comforts of life you can get without the stress, which is so important.
Yeah, 100%. And you know what? Because this is especially the process of buying houses. This is, I'm kind of seeing people not at their best, but probably their most stressed.
Yeah.
And part of it is almost like I'm that pilot that there's going to be turbulence, but you have to get to your destination and make sure that the voyage there is just as smooth as possible. So it's foreseeing, understanding some challenges that might happen, or just really understanding the landscape of,
Yeah.
because we deal with so many different lenders, and so many
Yeah.
people are walking into their bank, and they're getting their pre-approval, and the bank only knows what the bank knows. It's their four walls, and that's it.
Yeah.
And not really understanding, and sometimes not even telling all the ins and outs of what that particular product would mean to them, and it might not necessarily fit into the long-term goals, right? So,
Yeah.
and
Yeah.
it's
No, I mean, I love the banks, but whenever somebody comes to me and if they're coming to me for advice, I always say go to a mortgage broker because, like you said, bank only knows four walls. So if they've got like a shoe size 9 and a shoe size 11 and you're a 10, they're going to give you an 11. And that's not going to be the perfect fit, but at least you can wear it. So
100%.
and then with the mortgage brokers, at least I feel like if you get a good mortgage broker, you build a relationship, like you're just saying. They should, and mortgage brokers should be building relationships too. At least the good ones are, because I want to be able to call somebody and say, "Hey, this is what's happening in my life, and can you help me out with this or that or whatever it is?" And they understand my risk tolerance, they understand where I'm coming from, to be able to provide me good solutions on whatever it is that I need.
Yeah, 100%. And I think that's you have to, and not everybody's situation is perfect either, right? So
Yeah,
you really got to, when you're talking to us, you got to talk to, it's like going into the doctor. If you don't tell them all the symptoms, they can never really give the right prescription or recommend the right treatment. And so sometimes I see people, they don't want to mention there was a credit incident that happened,
yeah,
but I'm going to find out, right? So you're going to see
yeah,
it. So just tell me everything else, because then we can navigate through it together, right? So, and I think that's important too. And you're right. Sometimes when you get into the banks, all of a sudden something will put you outside. Sorry, we can't help you, right? And
yeah,
that
yeah,
it's not that it's wrong, but it's just not fair, because there's so many people that I've talked to, that thought they were so far away from home ownership, and all of a sudden, within 30 minutes, you can just see, how they've changed. All of a sudden, you can see the excitement that something they thought was going to be maybe years away is maybe 6 months away, right?
yeah. Oh
And
wow.
it changes, perspective. It gets them all excited, and then we come up with a plan, right? And that's basically, that's the great thing about, what we do.
And so you, just kind of touching back on what you just talked about a little bit earlier. You said that you were instructor for the Ontario Real Estate Association. Um, I'm assuming you're also, as being the principal broker at your brokerage, you're also doing a lot of teaching for all of your mortgage brokers that are working within your organization.
Oh, yeah.
My question to you is then, what do you feel makes a very good mortgage broker? Sorry. What makes a very good mortgage broker? What sets apart, I would say, an average broker from a really good broker? And the reason where I'm coming from this is I want my listeners to kind of understand what they should be looking for if they are looking for a mortgage broker.
Yeah, that's a great question. Because our brokerage, we probably have, maybe 5, 7 people apply weekly to try and get into the brokerage. So we are really selective in terms of our hiring process. Is some key things that, we look for. And if I tell you those people that are applying, they're just going to say those things. But I'm going to tell you anyway, right? So, because I can see through these things. So first of all, one of the things we look at for is your why. Like, why are you getting into the industry? Um, And is it something that's money motivated? Where's your heart and mind? What is it telling you? Why are you in this? Because really what we're all about is impacting people's lives, right? And in some ways that we can do this and maybe um, make people more educated during that process, that is so important. Their engagement in, like, we are, like, with our particular brokerage, and every brokerage is different. We do tons of really deep training, and not just training in mortgage products and everything else, but how to make connections, right? How to really connect to people and
Yeah.
understand that you got to listen a lot more than you talk, right? And um, there's statistics that say, even with realtors, when they're going for their listing presentations and everything else, the ones that talk less are the ones that close more of those signed agreements, because they're asking great questions, right? We need to ask questions to understand
Yeah.
where people are and where people want to get to. Um, and I think that at the end of the day, it's, you have to have a strong drive. You have to be willing to really, really learn, because this industry is changing so much. It's so different than, say, 15 or 20 years ago when I got
Yeah.
into it. It was, you used to get a rate sheet, and this was what you had. This kind of product is very basic. Now you kind of like to you get somebody to say, hey, what's your rate? And how do you answer that? You don't, really shouldn't answer that,
Yeah.
because there's so many factors that come into play in terms of having a mortgage with a lower rate but with the wrong strategy or the wrong features to it could actually cost you more in the long run, right? So we need to understand all the intricacies of all the financing side of things, but really understand where people need to get to and make sure that everything is matched up. I think that we have people. I have a few people, especially some of our new agents. We have new agents, and a lot of brokers don't hire new agents, but we put them through such great training. One of our agents, in his first year, he did $24 million in volume, and everybody else is just not far behind him.
Mm-hmm.
So it's you know anybody is looking to get into mortgages and at a career side, just make sure you align yourself with the type of broker is going to give you such a strong foundation that you're going to be able to build on it. And I think that's important, because how you're going to impact your people, and obviously what it's going to mean for you, your career, your family, is just as important, but really it's going to translate to the people that you're serving. And you know what, it's bringing much more value to them. So and you got to be all in. It's,
Yeah.
you can't be saying, I do have people say, I work real estate and I like to do mortgages, or
Yeah.
I can only do it on the weekends because they park cars during the week or something like that. You got to be all in, because there's so many things in this industry to know.
Yeah, I mean, there was a time where a mortgage was a mortgage was a mortgage. It's no longer the case, because there's just so many different types of products out there that
Hmm.
you really have to devote yourself to understand it. And to what you're saying, I feel like when individuals are coming to me, and I have like just people come and ask, like, okay, well, should I be looking for the lowest rate or whatever it is? And my answer is always, um, the lowest rate is the dumbest place to start. And I could say these things because I'm not a mortgage broker, so they can they know I've got like no skin in
Yeah,
the game. So other than just the number one thing I say is find somebody that you can communicate with properly
yeah,
and trust, and then let them take over. It's just like a doctor, like you said earlier.
yeah.
If you can't trust them, right, and you're telling them that this is how it's supposed to be, there's something wrong there. So you should find somebody you build that trust and that relationship with, and then let them take the wheel.
Yeah, absolutely. And when you talk about rate, like I have, like I can tell you, I can show somebody two mortgage products with a regular standard bank regular product, and another one that has a rate at least probably 0.5% or maybe 0.75% higher than the bank one. But all things considered, this one here will be paid off at least 10 years sooner than the bank one,
Yeah.
even at a higher rate. Is because there's so many other things other than rate. This is what you said,
Yeah. Yeah.
that can play into it. And it's just like, how long, one of the things I like to ask is, how old do you want to be when your mortgage is paid in full, right?
Yeah.
And what would that look like for you? How would that feel? You're gonna feel different when that mortgage, you make that last mortgage payment on your house. You're gonna, that night you're sleeping in the house, you're gonna feel different about it.
Yeah.
And it's an incredible feeling. But that said, on the flip side, maybe you shouldn't be paying off your mortgage. Maybe you should be leveraging the access to the equity to invest and build up more net worth in your portfolio and everything else. So, but everybody's different, right?
Yeah.
So it's
The
just
risk tolerance difference, their background is different. You really got to sit down with somebody and really understand all of this before you can kind of just jump into it.
yeah.
Um,
Yeah, and it's not always like, if it's for an investor, it's not always, I have people that call me and say, I'm looking to buy my first investment property, but some people are thinking I got to buy something down the street, right? But
yeah.
maybe it's not here. Maybe we look at investment properties in Calgary or Alberta, where the market,
Yeah.
is a little bit more priced properly, where it's going to cash flow and everything else. And the strategies, property management, everything else that we work in to work on that too. So anyway, so many different things that we,
Yeah.
yeah.
No, definitely. And I think my next question, and I think we've covered a lot of it already, but I still want to kind of go through it for my listeners. What would be the experience working with you and your firm? Like, what has to happen? Are you completely digital? Do you meet in person? Do I shoot you an email? Do I give you a call? Like, what is it that is like the complete kind of journey working with you to get a mortgage?
Yeah. So, you know what, right from the first part, as soon as somebody comes into our world, we actually create a world around our clients, right? So it's now basically understanding kind of where they are in terms of experience. So if there's a first time home buyer, they're going to start getting seeds planted in terms of different things they can expect. So nothing's a surprise as they go through
Yeah.
it. Meeting with clients, it's funny because our industry's changed so much, and especially since COVID, it's been, it's hard for me to meet clients because they just don't want to, a lot of them don't want to
Yeah.
meet face to face. I met somebody like last week in my office. It's like, hey, can I come to your office? I'm, yes, please. I'd love to see people. This is awesome, right? Because it's almost become a thing of convenience with Zoom and everything else. Like, we do a lot of video, like, so when we do things or we're describing things, it's us, video, everything else. And then our meetings are through, Zoom and everything and whatnot. But it doesn't have to be. Like, it can be face to face. But I think it's gone to such convenience now in terms of the process, because you can make a deeper connection, you know, on the broker side, because we're focused on you. We're not, you're not one of whatever.
Yeah.
You are you are our world. And generally what happens is, between the time that we start with one of our clients, the time that they end up buying or selling or doing a transaction, during that process, they've been so I guess comfortable with everything else. We usually end up with 2 or 3 additional referrals from every client between
Oh,
that
well.
that point, because they're just like, they're like, you got to use these guys, right? This is an incredible experience. I've never had this type of experience before. So, what is the experience like? It's really, that's one of the things how do you like to be communicated to? How often do you like to be communicated to? If they say, hey, listen, if they used a mortgage broker before, say, why aren't you using that other mortgage broker? And they might say, hey, listen, he never called me, or he never did this, or after we did this, I never heard from him again, that sort of thing. And it's really understanding what you need, right?
Yeah.
As the client, right? That's what's most important. um, and getting feedback too, right? Because we want to make sure we can always be better. We have a course that we do with our team, is delivering a 5-star client experience, right? So
Hmm.
it's like, okay, anything that they would expect, we have to say, okay, let's start doing what they don't expect, and those
Okay.
those are the things that set you apart. Because most of my business is all done through referrals from realtors, and some of our agents have financial planners. There's all sorts of different where sources come from, but at the end of the day, I got to make everybody look like they're a hero, right? So and you gotta represent your referral sources and make sure that they go back to that referral source and say, my god, thank you so much for because they're taken care of, right? And that's what's important.
Yeah.
Yeah.
Yeah, that's the most important part. Wow, that's pretty much. I don't have any questions on that part. It's a very strong answer there.
Yeah.
So I just want to change gears now
Mhm.
to just more what's happening in the market. And I've got a lot of questions in this area because there's just a lot going on, and I think that since the beginning of this year, I've at least in my experience, it's been some of the biggest changes I've seen in my career. Safe to say, I've read about bigger changes, but I haven't really experienced them, especially with the interest rate going up, inflation being so high, interest rates going from record lows to becoming a bit more normal, but people thinking that they're record high
Yeah. Yeah.
because of where, and then prices jumping, housing prices jumping 20-30% in a year to the first time in so long that they're softening up. So my question, I guess, just to start it off, and I know this is a very heavy subject, and I'm asking you a crystal ball question. What's your perspective on rates in terms of the Bank of Canada? Where do you think we're kind of headed? Do you feel that, based on your experience and your judgment, are rates going to keep climbing? Do you think that they're going to plateau? Do you feel like, I mean, we've got analysts who are saying it's very different things. RBC came out with something, I think, a few days ago that everything's going to crash and burn. Everything's going to fall 20-30%. I've got analysts who are saying that interest rates are actually going to start coming down Q4 or Q1 of next year, just because you're going to you're going to be pushed into a recession, and then automatically you have to kind of do some easing there. What's kind of your perspective on all of that?
Yeah. So it's such a tough question to ask. And it's amazing that you're asking this because I'm getting calls from realtors because they don't know what to say to their buyers. I'm getting calls from my past clients saying, hey, listen, I'm in this variable. Should I be locking in?
You
There's just so much uncertainty. And when it comes to the Bank of Canada, so because I was pulling up a quote the other day, it was probably a year ago, that they were saying, hey, expect low rates till the end of 2023, right?
know.
So sometimes we know how far the Bank of Canada can predict stuff, right? So that's the way it is. And sometimes we go with, this is what these guys are saying, this is what these guys are saying, and we kind of make those adjustments and guidance, accordingly. But obviously the big kicker here is the inflation, right?
Yeah.
And this is, it's a record, I don't know what it was. It was 8% or something like that last month. It was recorded at, and BOC, Bank of Canada's, automatic, I guess reactionary thing to try and control this is obviously by controlling the interest rates, right?
Yeah.
And they're adjusting prime, but we also have to understand that just because you adjust the interest rate doesn't necessarily fix the inflation thing, because they're not adjusting the rates to fix inflation. They're adjusting the rates to slow down the economy, which in fact will effectively affect the inflation side. So there's such a process in place that, it's not something by Christmas time everything should be, perfect again. What you just said before too, just where rates are going, we were, a month ago, our prime rate was 3.7%, right?
Yeah.
They raised it by 1%, which was pretty significant. Surprised a lot of people they raised it that much, right? So, but at 3.7%, before COVID, our prime rate was 3.95%, right? And
Yeah.
people forget, because it was like, what do you mean it was 3.95%? Everything was great in the real estate world before COVID. Everything was still cruising along, and
Yeah.
else, and it was 3.95%. So yeah, we're a little bit now. We're above what it was before COVID. Will they continue to raise the prime? Yeah, they're going to, because just until they get a grip on where inflation is, that's generally what's going to happen. They're predicting that by December, prime, by Christmas time or December, prime will be somewhere in between 5.2 to 5.7%. Okay, so where 5-year rates are right now, close to 5% or a little bit above. If your variable is prime -1, prime -75, you're still better than, say, what some of those 5-year fixed are. Um, but at the same time, bond yields have kind of flattened out, and they're saying, okay, maybe the 5-year fixed and everything else are kind of just stable, and they're coming down a little bit too. Like I've seen I had a whole bunch of lenders lower their 5 years last week or last few days anyway.
Yeah.
So we've seen that, but where the some of the big issues are is that we see a big decline in sales, right? So I looked at GTA area, looked at most of Canada. The only one that's kind of really staying on par is Alberta, right? So Alberta seems like the healthiest market right now on the real estate side of things, but we had a 1% increase in listings, say last month, but a 41% drop in sales, right? So it's just, so you're
Yeah.
so many more. Um, it looks like there's more listings. It's just they're not being sold as quickly. So we're right now we're hovering in a balanced market, but we're heading down more into a buyer's market, right? Um, so that I can see, and that's going to kind of be the trend for a little while, because you have the other issue with, we look on the positive side. So right now, Canada has over 1 million job vacancies. 1 million.
Yeah.
It's a record. I think 130,000 of them are in the health sector alone.
Oh
Uh,
wow.
but you got close to 500,000 new immigrants coming into Canada every year. Over 60% of them will settle in Ontario. Okay. CMHC says to keep up with the demand, they need to build 3.5 million more homes by 2030,
Oh wow.
and that's 7.5 years from now. They're not even close. And what you're going to be finding right now, like right now, we have issues with even construction labor, right? So they just don't have enough people to
Yeah.
work, right? We're hoping that maybe some of this new immigration would fill in those vacancies. They don't have enough labor. The cost of building has been, huge. There's articles, I don't know if you've seen it recently, with some of the builders. People were getting to the lawyer.
Yeah.
I don't know if you got any of these.
I didn't get any of these, but I've heard of them. Yeah.
All of a sudden there's a line saying additional costs 127,000 because of the cost of build. All of a sudden they get to their lawyers and they're finding out they have to come up with another $127,000 because the cost to build their new home was being passed on to them, and that's how much it was. How do you get
Yeah.
like you finance based on this? Like, it's just people are scrambling right now to try and close those homes, and that this is like their first notification just before it's supposed to close, right? So obviously cost of builds and everything else, it has been pretty it's been expensive. It's like renovation costs and everything else is through the roof. So you're going to see that some of this stuff is going to be slowing down. You're going to be seeing maybe some of this construction projects being paused as they have the shortage of labor. And the activity, I think the activity for purchase and sale, I think it'll stabilize like probably mid 2023, because the influx of the immigration and everything else is now just going to be pushing that up. So your house value that you talked about, going up, 30 or 40% in one
Yeah.
is not normal. Like, it's not
Yeah.
normal that house values go up. Like, I saw some areas it went up 48% and whatever. So it's adjusted. 2017 it adjusted. It's adjusted too. Over the long term, you're still going to see an increase in value and prices, but it's going to be more on the average increase, right? As opposed
Yeah.
to 50% per year. Like, that could not continue. There's no way that could continue. So overall growth probably starting 2024, that you're going to see everything just starting to soar again. Um, and I take a lot of this stuff. So our brokerage, we use Dr. Sherry Cooper. She comes in and gives us. So the stuff that I'm kind of telling you isn't just from here. It's really stuff that she's a chief economist for Dominion Lending, and she knows her stuff pretty well. So this is kind of some of the things that I'm sharing from her.
Yeah.
But so the question is now a good time to buy? Right. And I think real estate's always a good time to buy. You just, again, with the right strategy. and understanding, where you're at. And some people are saying, I was going to sell my home and buy something else, but now my home's gone down by whatever, 10%, 15%. But probably the home you're going to be buying has gone down by the same amount too. So it's all relative, when you're
Yeah.
thinking of going from
Yeah.
here to here, right? And if you have a mortgage, right, existing mortgage, you can port that mortgage, and if it's a lower rate, just port it over to the new. You don't even have to worry about new interest rates, right? So you can keep that same mortgage and not have to worry about where the interest rates are as well.
I mean, I find that to be interesting. So I have a few comments on what you're saying. I feel like if the prices are going down, it's directly a function of interest rates. Like you said, there's no. I mean, we've got vacancies in terms of jobs. It's not like we have excess supply. It's just solely the function of interest rates that we got to calm everybody down. But the funny thing is that to what you're saying, like a year ago, even earlier this year, if you're going to sell a property and then buy something, by the time you sold it and bought it, the prices went up, yet people were jumping into that market. Here, now, it's like, you know what? They are dropping. But when you sell it at a higher rate than you're buying it at, right? So, and because they're consistently coming down, that is not a bad market. And if you're
Yeah,
looking at your house prices, like if you're day trading, you're going to be unhappy. But if you're looking
yeah,
at long term value, right, you're not going to be selling your house in the next month, 2 months, a year, right? Even if you're going to flip it the next day, there's never been anybody who's been profitable flipping it the next day unless something they've got a really good deal. But for the average person buying a house, buying it one day, selling the next day is never profitable. You're gonna sell it 5 years, 10 years, whenever it is. If you do plan on selling, you're gonna spend a few years in it. By that time, I don't think people end up losing money. You're always up. It's just that how much are you up, and is that worth you kind of holding back on your quality of life? Because there's qualitative metrics too. So you could earn potentially another 10,000 on your appreciation based on when you buy it, but is that worth your quality of life, right? And the comforts that you get. And then to the other thing where people are kind of like looking at, okay, well, I've got to buy it at the bottom of the market. The only time you're going to find the bottom of the market is when it's going back up. So it's
yeah,
already too late.
yeah, yeah. No, 100%. And here's the other thing too is I see some of my buyers, I'm talking to, well, I've seen prices go down. I want to wait. I want to wait. I want to wait. Um, but you also have rates going up, right? So all of a sudden, if they qualified for, say, a $600,000 purchase, and now there has to be an adjustment to the qualifying rate, right? Because of what they're qualifying for. Now they go to make the move on that $600,000 home because maybe they get more of a home for that, but maybe now they only qualify for 500,000,
Mm-hmm.
right? So there's other factors you gotta keep in mind. And I think that when you talk about interest rates, so a lot of people like, listen, those rates were crazy low, right?
Yeah.
They probably kept them lower than they probably ever should have for way too long. Because if you're paying 2% or 1.89 after your variable discount, and now you got to pay 4.7 or whatever, or
Yeah.
4.4, you were still qualifying at 5.25%. You were still qualifying at a much higher rate.
Yeah.
Um, and what we're seeing too now is we're seeing a lot of rate increase in wages and everything else too, which when you really do the math on it, it's like, hey, you're kind of more or less in the same position you were before. For most people, not everybody, and every industry is different. Um, but yeah, you know what? You're right. Over time, like housing is like for me, from what I've seen, and this is the great thing about it. It's such a great way to build your net worth and everything else through the increased value of real estate over time, right?
Yeah.
Uh, it just seems to, I got money in the stock market and I see my house value and I'm thinking, oh, geez, why don't I just buy another house?
It's
It's
not a
going
good time to look at the stock market right now.
yeah, it's like, oh, it's like crazy. And now, but I can't take the money out of there to do that because it's too low now, right? So,
Yeah.
um, so that's the, you kind of get stuck with it. But yeah, I think that you're absolutely right. Real estate is one of those things that over time that's going to make a big difference because especially when you look at rents right now, right? Like
Yeah.
the rental market it's sparse. Like there's not like a huge amount of rentals available, and it's expensive, right?
Yeah.
So people are paying almost more than, pretty much for a lot of them I've seen, more than they would be paying on a mortgage payment, right?
Yeah,
So
yeah, yeah. No, 100%. So, just as a last topic of conversation, I think we had spoken on our call prior to the podcast something about co-ownership, and I found that to be extremely interesting. Why don't you kind of give the listeners a little bit about what co-ownership is, and how they can use it, and what the advantages are of co-ownership in a market like today?
yeah, for sure. And you know what, market like today, market like it was before, there's a place for co-ownership financing. I'll kind of explain what it is because people are thinking it's like your own house with another person, but it's not really like that. So basically, when we talk about trying to get into a home, and let's say for example, you and your wife, you make some decent income. You could probably mortgage wise, you can maybe afford a home for, let's say, $1 million, right? But anytime you get to $1 million, you need a 20% down payment, right? So let's say you have $100,000 saved between the two of you,
Mm-hmm.
right? And you're renting right now. You're paying, what's a typical rent in GTA? I don't know, 2,500
Yeah.
a day. Okay, let's say that. And so let's say you're paying 2,500. Let's say $3,000 a month. Let's round it up with your costs and everything else. So, and let's say now, okay, you want to get into that home, but you need to start saving per month. And let's say you double that. You saved an extra $3,000 per month just for the savings of it. It would probably take you about over 4 years to get to the 20% that you would need for that particular type of purchase, right? So that's where something like co-ownership financing would come in, and it could be less than $1 million. I'm just using this as an example. But what it does is it shores up your down payment to give you a 20% down payment. Okay. And when you do that, what happens is now as a mortgage is if I was going to have less than 20%, I would have
Mm-hmm.
to pay insurance, CMHC or Genworth,
Yeah.
type of thing. So it eliminates that. So there's no more insurance cost. It now allows me to go to a 30-year amortization mortgage, so which allows me to qualify for more. Okay.
Okay.
So that's increased my mortgage amount. But now with what I've put on top of it, plus the 20%, it's optimized my purchasing power to be a higher amount. So I can actually purchase more of a house than I could have if I didn't have if I wasn't using this particular program. And so let's see how it works is, let's say, for example, I buy this $1 million property. Okay. And let's say I have
Mm-hmm.
$100,000. So that's 10% of the down payment because we would need $200,000 as a down payment for that 20%. So I do 2%, 10%. The co-ownership company does 10%. That gives me my 20% down. And basically what they do is they take an equity share in the future value of that home. So if I put 10%, they put 10%, I would have 50% equity share, they would have 50% equity share. Okay. So let's fast forward 5 years from now. Let's say home's worth 1.5 million. So
Yeah.
what would that mean? So it basically means it's increased by 500,000. So 50% of that is I'm going to walk away with 250,000. They would walk away with 250,000. But I've also been contributing to the mortgage, right? So I started off with
Yeah.
$800,000
Yeah.
over 5 years. Let's say I paid $100,000 off that mortgage. So I would actually be walking away with 300 because I get full credit for everything I've paid towards it. So that's where the like rent and save, or why not you just buy a home and now you're paying equity towards yourself. So now I'd walk away with that home with 350,000. So if I backtrack to the point where I was thinking I was just going to try and save
Yeah. Yeah.
and maybe with 200,000, I can get into a home today and 5 years from now potentially walk away with 350,000 to go buy my next home. So I've just leveraged a smaller portion of my down payment to buy real estate. And with this program, you can buy up to 1.7 million with 5% down.
Oh
Okay.
wow.
Yeah, so lots allows a lot more flexibility. Now, I have been doing them with homes, $600,000 homes, et cetera. So it's not. I'm just using the million. It's just an easier example to use the million to 1.5. The other thing with the co-ownership, the company is not on title. There's no payments. There's like a beneficiary agreement in the background. When you sell it, you're going to pay them their portion. Um, but let's say, for example, let's say the market changed in 5 years from now, I go to sell it, and let's say that property is worth 800,000, not a million. They walk away with nothing. Okay, so they're going to share in the increase or decrease of whatever that is. You would still walk away with all the money you put in towards the mortgage. You still walk away with 100,000, right? So you would still be
Okay.
okay even if the market went down. And so you can have this program up to 10 years. You can sell it anytime. Whenever you sell, it's just whatever that market is. There's no restriction. You can refinance. You can rent out.
Yeah.
It's your property. It's your property. Is what it is, right?
Okay.
Um, and even with the closing costs, like we've eliminated, like we do it for the first year with an alternate lender because a lot of the A banks, they wouldn't recognize this type of down payment. So we do it 1 year with the alternate lender, and then after that 1 year, which their rates are basically the same as like 5 year fixed to the banks right now.
Yeah.
After the 1 year, you can move it to whatever lender we want, right? So because now it's a refinance, not a purchase, we don't have to worry about where the down payment optics are coming from,
Okay.
and that's how that works. So um and if you have, let's say if you're going to purchase something, you have options to get a down payment from a family member or somebody else, with gifted funds. That's your first, that's 100%. That's, we go that route first. But if there's not everybody has that extended family that can just this
Yeah.
here's 100,000 for you, go buy yourself a home, right? So anyway, but I thought it's a really, really unique program because it's timely. Like I had families that were, they qualified for $900,000. They just didn't have, like they had 3 kids and they couldn't find a 4-bedroom home in the GTA under $1 million.
Yeah.
But mortgage wise, they would qualify.
Yeah.
They just didn't have the down payment, right?
Yeah.
That's where these sort of things fit. And it's knowing these other things, like especially when clients come to us and saying that's where we talk about, people that
Yeah.
thought maybe they're years away. Maybe it's rent to own. Maybe there's other programs that they can actually fit into. And that's why it's so important to really understand, sort of the complexity of where they are in their life and where they want to get to, and say, okay, what's your timeline, and let's figure out a way to do it, right?
Yeah, I mean, it's products like these that I always say speak to a mortgage broker because that's a very creative solution to a problem that a lot of people have, and it's something that I've seen. I've never heard of this solution. It looks pretty good just because there's more of an equity share because I've seen co-ownership structured more as debt, and that becomes just another mortgage that you put on there, and it's kind of more of a headache and stress than something that's helping you get into a house, and it's just
Yes.
easier to save. But this is more, it seems like it's more of an equity position, so you're not worrying about the guy who's giving you the money. You're just kind of paying off the debt that you have, and then when you sell it, then obviously because they've invested with the property, you split profits in whichever way you've agreed.
Exactly. And like I said, they share the risk too, right? So if it
Yeah.
goes up or down, they're just getting their portion, right? So I mean, and it's that particular program though, just to kind of make sure you're aware, is really only available within the GTA. So it's kind of like Toronto, York, Durham region,
Yeah.
Peel, Halton, and Simcoe. They will be expanding it, but right now you're looking at, that's where we know the market is has been fairly consistent and steady, and that's where they do your investment. So just around the GTA right now, but that's it's a solution that guaranteed, like a lot of people just don't know about, right?
Yeah,
So
no, it's first time I've heard of this, and I've gone through a lot of deals, so that's a very innovative solution. I mean, if
yeah,
and obviously there is more to it, not more to it in terms of complexity, but obviously if anybody is looking for a solution like that, they should definitely get in touch with you. I'm gonna have Lorne's contact information depending on where you're listening to, either on the bottom or on the side. If this is something that interests you, definitely get in touch and see how you can take advantage of the situation or the solution to get a house. You know what? It's been an amazing conversation, Lauren. Like I've really learned a lot personally from about especially with this co-ownership. It's been a great conversation on basically everything. Thank you for coming on the podcast. Any last words for our listeners?
well, listen, like I said, it's home ownership might be a lot closer than you think, and then I would say that anytime you have, whether it be a mortgage renewal coming up or whatever, or even anniversary, or even if it's not coming up, don't be afraid to kind of lift up the hood, see exactly where you
Yeah.
are now. Like it's just do it. It's like doing your checkups, right?
Yeah.
And Some people just wait for 5 years. Here's the maturity. Now, what do I do? Right.
Yeah.
And I think that's what you got to really do is think of, where do you want to be? And at the end of the day, if working on a strategy that could maybe help you get there 5 or 10 years sooner, what kind of difference would that make in your lives and your family as well? And there's ways to do it, but it's you just got to just reach out and just start thinking about that right now, because a lot of people just put it and forget it. Like I said,
Yeah.
fire now it comes up, and now what do I do, right? So, but there's lots of stuff that you can be doing in between.
Awesome. Thanks for coming on the podcast, Lorne.
My pleasure. This is fantastic.